Okay, good morning. Get started for continue the chapter 3, adjusting process. So on Monday we covered a few of the adjusting entries. So remember this chapter, the main purpose here, we're trying to bring up some of the accounts to its up-to-date status before we actually do financial statements. Okay, so this is the main purpose of adjusting entries, and there's 5 types of adjusting entries, which on Monday we covered the first 2 already. Okay, so let's just briefly go over the prepaid expenses, depreciation that we covered on Monday already. So remember prepayments, all the prepayments, the money that the cash or any types of checks that corporation paid in advance for certain type of benefits is a type of asset, right? So prepaid expense is an asset account. Remember we went over this journal entry. If this company paid rental expense in advance for 3 months, altogether $3,000, at the end of the first month, when we use up 1 month of benefit, when this part of the benefit is no longer in force, we want to change that into rent expense. Okay, so the prepayment is a type of asset. We turn that $1,000 into rent expense, and at the same time reduce prepaid rent. So reduce an asset account, turn it into a type of expense. So this is the first type of adjustments. For all the prepayments that we made earlier during the accounting period, those journal entries were readily captured here during the process. It's either in the beginning of the month or somewhere in the middle. We want to adjust the part that we already used up. So for example, if it's supplies, we purchased $2,000 worth of supplies in the beginning of the month. At the end of the month, we want to reevaluate how much does it worth, the supplies that we still have in the business. Okay, so in the middle, whatever we have left compared to what we had in the beginning, the differences, we want to adjust it. So if it was supply, then we want to reduce supplies asset by crediting supplies and turn it into supplies expense. Okay, same for insurance. If it's prepaid insurance for certain, let's say for 6 months, and after a month using it, we turn that into insurance expense. Okay, so just recognizing the part that has readily expired, that is no longer in force. Now, what is depreciation?